Hello traders, welcome to another daily analysis. We're actually just 10 minutes past midnight, so right now it's already Friday Eastern Standard Time, January 6th. So we're going to do analysis for January 5th and January 6th all together. So first thing first, the service PMI from UK last London session was once again a positive surprise. And that was actually 3 consecutive PMI data this week from UK, which of course is very positive to support British pound. But also, once again, it did not give us a negative catalyst to enter short. But we're gonna look at a chart later to see how did British pound react, upon this kind of positive, actually very positive data consecutively for British pound. Now, normally, again, this is where you can see if the market sentiment has correlated with the fundamentals. Basically, if the traders are willing to buy British pound or not. So if they're willing to buy British pound, then the positive data should really make the British pound surge. Now, however, if the general sentiment is still negative, which it is still negative, then upon the positive data, sometimes you don't really see much movement for a single currency. The US employment data today were mixed. Actually, we have a negative ADP, but a positive unemployment claim. Of course, the mixed data, generally speaking, did not give us trade opportunity either. But the ISM non-manufacturer PMI was positive from US. But generally speaking, if you follow the market, dollar has been weakening for this week. It's all from the first of all, the FOMC minutes give us a lot of cautious, actually a lot of uncertainty, and then you have today's mixed employment data, but you also have tomorrow's NFP, which is more important. It's a key data for traders to take a look at. So normally you will have a lot of basically profit taking or price in, but depending on what's the expectation. Now, expectation was actually a negative expectation, basically, which we're gonna show you later. So that's why you might have some retreat from US dollar, or it might just simply retreat from the last new high for US dollar. This could all be the reason, or could be the positive strength from other currencies, which basically diminish the US strength. The crude oil inventory today was, as expected, it's a draw, but it's a really large draw today. It's of course support the oil market and Canadian dollar. News from Saudi Arabia Aramco, which is the largest oil company, start talks with the customer globally. They discussed the possible cuts of 3 to 7% to meet agreement with OPEC. So seems like it's a good sign. People oil producers are start to follow through with the agreement, and with the draw from last December, that's really all quite positive for the oil market. And of course, that's all good news to help Canadian dollar. Now, Canada also has the employment data tomorrow. So again, that's going to be key data to determine the direction of Canadian dollar. It's either going to boost this week's gain for CAD, or it's going to reverse the position. Sentimentally, it's a kind of shift a little bit for this week, first week of trading year, since the FOMC minutes and also of course today's US data. So things shift a little bit, but generally speaking, still a very risk on sentiment. Things are still very good for the financial market in large, but it's just a little bit weakening for US dollar. The biggest winner, as mentioned, is Canadian dollar actually so far. The upbeat oil market data and the weakening US dollar is playing another effect as well. So again, we will have to see what happened tomorrow to the CAD employment data. US dollar is actually kind of biggest loser this week. It doesn't really goes to a downtrend or anything, but it reverts quite a bit from the high and that's why it's really lost a lot of strength. And of course, tomorrow's NFP might continue to pressure US dollar, or it might reverse it, make it find its support, and might turn around to keep going up. So we will have to see what happened to the NFP tomorrow. And the Australian dollar was another winner this week. It benefited from positive Chinese data, weaken of the US dollar, which, as mentioned, traders, if they're looking for high yield, they either buy US dollar or buy Australian dollar. So the weakening of US dollar also help Australian dollar, and it also has a positive trade balance today. Then I read the news. It says it's a first trade surplus in almost 3 years. Now, of course, benefit from the rising commodity price. So Australian dollar is actually looking very well, fundamentally speaking. The only thing that's really going to change is really the sentiment. So unfortunately, it does suffer quite a lot from the sentiment. It reacts quite a lot to the sentiment. So sometimes what happened to Aussie, it does have a good fundamentals, but as soon as the sentiment shift, people just dump it very, very quickly. So that's why you do have to watch out for the news and what's happening to avoid riding on the wrong trend for Australian dollar. But as for now, it is quite a positive currency. New Zealand dollar came as second. It's actually quite neutral. It was positive upon until we have the negative GDT data. So of course that's painted a sort of negative pictures, but generally speaking, it is a good currency. Euro had a little bit of support this week. Of course, first of all, you have a consecutive good Eurozone data, but also you have the weakening of US dollar. That's of course going to support Euro. But data in general from December, which released this week, were all pretty good. It's either retail data, PMI data, or CPI data from different European countries. They're all pretty good. You actually read the news that the German economist is calling the ECB to raise the interest rate, because right now the inflation data has actually been very good for Eurozone. Now for Germany, of course, they had this history of hyperinflation back in the prior to the World War II. So it's just a sort of a fear, right, going around the German people, that the hyperinflation history. So of course they're really always holding this opposite view from ECB. But since ECB has said that they will keep the easing cycle now until December, so they most likely will probably just follow through. Of course, if we see any large change to the CPI data or PPI data from Eurozone, then that might change the ECB's point of view. But as for now, Euro is still a negative currency for me personally. So I'm really, all this surging of Euro dollar is really just going to really looking for a good level to short it again. Same thing as Swiss franc and Japanese yen. They're all still negative in general without any major catalyst. So don't really have much news today, and the market really, the biggest one is tomorrow's NFP. So I'm going to trade it. So today, unfortunately, as mentioned, service PMI don't really have any chance to trade, and the ADP data was actually negative. So I couldn't buy US dollar. I couldn't even trade another unemployment claim because it's mixed data. The ISM non-manufacturer data was positive, but not in the positive deviation. So US dollar right now, I'm still hoping to buy it, especially right now since we had a drop already, so it will give me a better level to buy actually. So the US non-farm payroll tomorrow. Okay, let me give you the expectation first. Okay, so you can see the non-farm payroll expectation is 175K. The max number will be 220. The minimum number will be 138. That means this 220 means it's a positive number. So if you see anything that's at 220 or or above, that's a very positive deviation for US. The unemployment claim is right here is 4.7%. So the maximum number is 4.8. Now this is a bit tricky because generally when you're looking at data, of course, like average earning, non-farm payroll, the maximum is always good. But in terms of unemployment rate, what you want to see is the minimum. So just take this into consideration, because I made this mistake myself, many times before. Especially when the news first release, you trying to trade it, you get very nervous and you really mix things up. So for unemployment rate, you really want to see a lower number, right? It means that you have a less unemployment people, basically. So you want to look at maximum number 2204 for non-farm payroll, but for unemployment rate, you want number to be as low as possible. So the minimum is 4%. The maximum is 4.8%. So remember, anything below 4 would be a very good sign. Anything above 4.8 will be a very negative deviation. So and if you want this kind of explanation, you can just click Forex Factory's free website, and will tell you what's the usual effect. So it's very handy thing to learn, actually. And average earning, of course, larger the better. 0.3% expectation. If you have anything above 0.5%, that's a very good positive deviation. If you have anything below 0, it's a negative deviation. So obviously, I do looking forward to buy US dollar. However, if we have a very negative data, it's still tradable for me. So if we have a very positive data, I'm either going to buy dollar yen, and if we have a very negative data, I'm going to buy Aussie dollar. So that's just Japanese yen and Australian dollar is my go-to counter trade for US dollar for now. So again, if we have positive data, now the most important thing to trade it is, first of all, you want to have a congruent data. So you don't want to mix data. If you have a mixed data, generally I'll stay out, because that's just diminish the probability. So first of all, you want to be congruent. You want to both up, three data are all positive. That's where I can trade. Second thing I'm looking for is a sort of deviation. So it can either comes from average earning, it comes from unemployment rate, or it comes from non-farm payroll. But at least I want to see one of them to be a positive deviation to buy US dollar, or a negative deviation to sell US dollar. If I don't have a deviation, I stay out. So it's kind of strict, I know that, but that's really how I trade it, because I understand you have this non-farm payroll every month. So all you're looking for is really, that 1 or 2 really good trade. So that's how I trade it, basically. And the third thing, of course, it's your own psychology. That if you are not sure, or if you just anything happened in the morning that defer you from trading, then don't force it. If things just didn't work out well for you, then it's fine. Don't need to force yourself to trade. So again, that's really the major things I'm looking for. So same thing applied to the CAD employment data. Employment change, of course, maximum number 25K. That's what you're looking for if you want to buy Canadian dollar. Minimum is minus 47K. That's what you're looking for if you want to sell Canadian dollar. Unemployment rate, again, it's opposite number. So you're looking at 6.8 or below to buy Canadian dollar. You're looking at 7.1 above to sell Canadian dollar. So for Canadian dollar, it's also tradable. For me, it's the only thing I'll do generally is to look at oil market prior to entering any Canadian dollar trade. Other than that, I'm actually more in favor of buying it because of the oil market. It's already up, so I'm actually not looking to sell Canadian dollar. But on the other hand, if the oil market, if the US data is good, and the Canadian data is bad, you can actually buy dollar CAD. But for CAD, it's a bit tricky. Again, you have to look at oil market to see what happened. So again, if you want to buy Canadian dollar and the data is positive with at least one deviation, and oil market is in and positive trend, then you can buy Canadian dollar against Japanese yen as well. Or you can buy against US dollar, but only if the US data is negative. Now, the other thing you can do is if the oil market is going downtrend and you have a negative Canadian data, then you can of course short Canadian dollar against Australian dollar or against US dollar. But that's only if the US dollar is good. So again, as you see, it's kind of complicated because you actually have two important data coming out at the same time. So it's really depend on what happened but of course I'll treat US data more important. Not because I think US dollar is more important, just because that's how the market view this data. They actually view this as a first data, US dollar, non-farm payroll, the most important one. Then if this is not tradable, then people will take a look at Canadian dollar, Canadian data. So that's pretty much it for my game plan for tomorrow. And let's take a look at anything else for later on London station. Don't really have any tradable thing. You have German retail, German factory order, French trade balance. This is all not tradable. Retail sale. So yeah, really only at the New York station you have the NFP and Canadian dollars employment change. And then you will have PMI, not really a big issue. Factory orders all not tradable. Noon, you do have a FOMC member speaks. Might take into consideration because you never know, first week of the January, you don't know what they're gonna say. So yeah, if you are in US dollar trade, then this might change your direction. So just take into a little bit cautious. But that's it for tomorrow, and that's really how we're gonna wrap up our first week of trading week. I don't really have any trade. So hopefully tomorrow we have trade, but of course, if we don't, then don't force it. I'm just going to stay in the sideline. So that's it for today. And yeah, pretty much if you have any question, let me know. If you find anything interesting, again, let me know, comment below or email me. Other than that, I'll be back tomorrow with the Friday wrap up, and let's see what's happening to tomorrow's NFP. Okay, thanks for watching, guys. I will see you tomorrow. Thank you. Bye-bye.